What's going on, everybody? It's Tas here. Welcome back to another video. So you guys see the light back there? You see what color that is? Well, if you don't see it, maybe you're colorblind. I'll tell you. The color is red. That means we had a red day today. We had the S&P 500 go down 0.7%. We had the Russell and the NASDAQ down 1% each, and the Dow went down 0.3% as we had the VIX up 7%. So we have to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, hit the like button, subscribe, check out my Patreon if you guys want all my moves in the markets, and you guys could also get 5 stocks free from Webull and $50 from M1 Finance. All that's linked down below. And with that being said, let's get right into the video. So what we're seeing here on SPY is a clear break under 465. We covered that in my video earlier on today. We broke that key level of support, which was resistance in the beginning of this month, right? You guys can see on the 1st of December, we failed breaking 465, and then ultimately we broke over it on the 7th of December. So today we collapsed under 465. We filled the entire gap down to 460, which we covered in my video earlier. 460 was resistance on the 3rd of December. And then we saw a bit of a relief rally, which makes sense considering on this 20-day chart, SPY got very oversold. So we got very oversold, hit 460, didn't break it, thankfully, well, at least for now. Who the heck knows what's going to happen tomorrow? So we hit 460, saw a relief rally, and we essentially filled the entire gap back up towards 464, 465. We closed at about 463.40, and now we're down just a little bit in the aftermarket hours. So we saw that relief rally, and we closed under a critical resistance, right? Not only 465, but also the 180 moving average. And with tomorrow being the second day of the Fed meeting, we're going to have Jerome Powell speaking, Q&A. We're going to get a whole document over, covering, targets for inflation, jobs, what's the word? Interest rates, bond tapering, employment. We're going to get a lot of stuff tomorrow. So the markets kind of freaked out earlier today. We got the sell-off, the rebound, and I'm not too convinced that this rebound's going to lead to more upside because, guys, look, the markets have been volatile. They're unpredictable, and they're probably going to do what we don't think they're going to do. That's kind of what happens sometimes. So SPY looking decent. We had that relief rally, but still, it's under a key resistance here. And when it comes to triple Q, this also broke a critical support today at 390. We got all the way down to about 382. Then we had a relief rally all the way back up to about 388.20. That's where we closed, right under 390, which was support. Now it's resistance. So if you're a bull overall on triple Q, you need to see it break 390, just like if you're a bull on SPY, you need to see that break 465 again. So we got oversold pretty much throughout the day today, saw relief rallies, and I'm not too convinced that these relief rallies are going to last. That's the kind of the moral of the story today, guys. And we had the VIX up 7%. VIX back over. It's back over 20 points here. So what do you think? Drop me a comment down below. Make sure to hit the like button if you guys find value in my videos. I really do appreciate all of you, each and every one of you out there. And we're going to need each like we can get because tomorrow is going to be crazy with the Fed, everything going on. And we all know all eyes are on the Fed. Every institutional investor, trader, retail, whatever, everybody's watching it, watching the Fed, and it's going to be exciting. So get your popcorn ready. Let me know your thoughts again down below in the comments. And with that being said, let's talk about some stocks here, some of which we've never talked about. I like the charts. Others, we have talked about them before. So let's go over number one here, which is ticker symbol CMA, Comerica, which is a financial services company. And if I pull up the 4-hour chart, this chart looks pretty good to me. We just hit a $91 high, and that might be an all-time high. Let me double check here, guys. Maybe not, actually. Let's go to the max chart. It's not an all-time high. The all-time high was back in 2018 when it hit $102 per share. And just recently, going back to that 4-hour, like I said, we hit 91 a share. We pulled back. We hit 80, double bottomed at 80, which is a good sign. Now we're seeing a breakout after that double bottom. So we double bottomed above the 180 SMA at $80 per share. Now we're trading at $83 per share, almost 84, and we had a 3% green day today. So I think if we end up breaking the 50 moving average here on the 4-hour chart, which is right around 85 per share, that is where we're probably going to start going back towards 90 per share, which is towards the top of the channel here on the 4-hour chart. So I just put my alert at 85 bucks. Watch out for this, guys. We've seen this pattern play out many times over the past couple of months. We get oversold. We hit support on the bottom of the channel here. We see a breakout, right? So now we sold off. We're oversold. Double bottom. We're starting to push. If we break that 50 moving average, 85 bucks, we're probably going 90. So Comerica, CMA, that's number one. Allstate is number two, another financial services company, ticker symbol ALL. This one went up 2% today, and the chart doesn't look as great as Comerica on the 4-hour chart here. In fact, we're not seeing a double bottom breakout. We're not getting any of that with Allstate. We're seeing a downtrend, actually. It's still under all of the moving averages, and we just recently hit a low of $106 per share, and the high from a couple months ago was $140. So the stock is in bear market territory. It's down about 25%, but if you peel the layers back a bit, take a look here. Take a look at the 3-year chart. What we're noticing is a very healthy pullback. If you look at the longer term trend from $140 now to about $100, $105, $110 where we're trading now, and we're noticing buyers are stepping in right by the 180 moving average here, where we did see buyers step in about a year and a half, 2 years ago. You guys can see, when we saw the COVID crash, we got to 64, which was admittedly under the 180 moving average, but we ultimately snapped back, got back over the moving average, consolidated right around there, and that is where we saw the next huge push from 90 to 140. Now we're back to 110, right back to those moving averages, the main moving average, which we might see support at for a couple of days, maybe just for tomorrow, who knows, maybe a week or two. And then ultimately, I think we will start breaking back out again. So Allstate, it's in a bear market. I don't think that's going to last for long. I think this is one of those companies that if we do continue to see the rotation out of these, higher multiple growth stocks, I think Allstate could be one that benefits. As of now, Allstate's P is a 10. It's pretty, well, it is undervalued compared to the overall S&P 500. So this might be one of those that people do flood into. You never know at this price where it's 25% off the recent highs. So keep your eyes on ALL. NUE is another one that I'm looking at right now. This is Nucor Corp. This one is down from about $128 recently. Let me take a look here on the chart. Yeah, it was $128 in the middle of August. Now it's sitting at $118, so it's not down a lot. I mean, it's only down 8%, which is nothing crazy, especially considering the fact that it dropped 8% in like 4 months. So, I mean, it's not like it dropped 8% in a day. It's down 8% in 4 months. So, it's not that crazy of a drop at all. And this is a steel company, right? They manufacture and sell steel and steel products. So, it's a very boring business. I mean, who the heck wants to be working with steel all day? I mean, no offense if you do, but I don't know. It's pretty boring to me. Maybe not. I don't know. Maybe I'm out of the loop. But overall, NUE, that's what they do. And I see a pretty nice setup right here on the 4-hour chart. We're noticing we're in a wedge. Higher lows have been being made ever since the middle of April, at least based on what I'm seeing here on this chart. We've been making those higher lows, and at the same time, lower highs ever since the middle of August, right? So we're in this wedge and we're actually starting to break out. Today we went up 2.5%, up almost $3 per share. We're starting to move out. And I think if we take the high out from the end of November at about 120, 121, that is where we're really going to start to see the push back towards that recent high, which probably is the all-time high on this stock. Let me double check. It might not. You never know. Yes, of course it is, guys. What stocks are not trading near all-time highs these days? So I'm going to put my alert at $120 per share on NUE here. And if it breaks that, we might get the green light to ride this to 128, maybe even higher. So set your alerts, watch it. Gilead is another one that I'm looking at. It's ticker symbol GILD. This one's currently down about roughly dollars from the recent highs of $73. That was back in the middle of August. So in other words, we are down a whopping 3.5%, which in the grand scheme of things really isn't much at all. 3-4% is not much at all, but I'm really liking the pattern here on Gilead. We're noticing an inverse head and shoulders, left shoulder, head, right shoulder. We're also above both moving averages, and we're also on top of that seeing an ascending triangle. And now that I'm looking at this, is this a bull flag as well? So inverse head and shoulders, ascending triangle, above the moving averages, golden cross, bull flag potentially. Let me see here. I mean, kinda, would you guys say that's a bull flag? Am I going crazy? We got the pole right here, between, the end of November, early December kind of, and then we got the flag forming. Now, all we have to do is kind of break out, and then we might be going to those highs again, 73, 74 bucks. So I think Gilead looks pretty bullish here, at least for my brief analysis and what I'm personally seeing. If I'm missing something, please let me know in the comments, but I'm liking it. I'm really liking it. So keep your eyes on GILD. LH is another one that I'm looking at, Laboratory Corp. You guys can see this setup is very similar to, I think NUE was the setup. Yeah, take a look at NUE setup here. Wedge, higher lows, lower highs on the 4-hour. Now take a look at LH. Pretty much same thing. Higher lows for the past couple of weeks, months actually, and we've been making lower highs since the end of more like the middle of August, early September. So we're in a wedge here. We're about to break out, in my opinion. We're above both moving averages. So if we take the high out from the middle of November, which has also been the high point since then up until now, which is around 297.8. So I'm going to put my alert at 298. If we take that high out, I think LH here could probably start gunning for 310, maybe even higher. So set your alerts. This looks pretty solid. Adobe is another one that I'm looking at. I know that I've talked a lot about Adobe lately, but it's because I'm watching it. Today we had a big red day in Adobe. It went down almost 7%. In fact, it was down even more earlier. If you guys take a look here, we hit $5.99. This is crazy, actually. Wait a second. I didn't even realize this. There's got to be a catalyst. I'm going to look into it in a second here. But yesterday, Adobe was $675 per share. Today, it went under $600. That is a big move. Adobe lost about 11% from $675 to $599, and now we're seeing a bit of a relief rally up towards $615. And if we go back to the 4-hour chart, notice how we're still holding an uptrend, and this is also in a wedge, right? So we got rejected by the top of the wedge yesterday at $675. Today we tanked all the way to the bottom of the wedge in one day, and now I think this could be a spot where we get another relief rally, probably towards the top of the wedge, anywhere from 640, 650, 60, maybe 670 even as well. That could be a possibility. So I'm watching Adobe as they are reporting earnings, not tomorrow, but on the 16th, and that's at 7 a.m. Central Standard Time. So pre-market, Adobe will be reporting earnings, and I've mentioned this so many times on the channel, guys. Adobe is one of those stocks that I want to own. I want to own it so badly, but it's just a little too overvalued. Even after it dropped 75 bucks a share in one day, pretty much, it's still way overvalued. I would love to buy Adobe in the 300 range, 400 range, maybe even lower. Honestly, I would love to buy it lower, but I don't know if it's going to get there unless the markets just collapse, which in that case, a lot of stocks are going to go on sale, right? Including the next one, which is Intuit. Intuit's down about 80 roughly dollars per share from the recent all-time high of 719. Now it's sitting at 640. It's down about, let's see here, percentage-wise, 11%. So it's not in bear market territory, which is anything 20+%, but it's in correction territory, anything between 10 and 20% of a drop from the peak. So we're in correction territory. We're noticing buyers are pushing this thing up today, even though it went down 4.3% at the close. We're noticing buyers did step in later in the day when we hit 627. We saw buyers step in. We broke out of 630. We closed right under 640, and that is right by the 180 moving average on the 4-hour chart, which if you guys take a look over the past couple of months, that is where buyers have stepped in time and time again. Whenever this thing pulled back, got into correction territory, it sold off to the 180 moving average, and that's where it pushed up even higher, guys. So I think this time it could be the same, but it also could be different. Just because things have happened in the past doesn't mean they have to happen again. But at this point, we sold off, down 11, 12%, riding the moving averages. Buyers are already stepping in. I think this could potentially go higher. So CMA, Allstate, NUE, Gilead, LH, Adobe, Intuit. These are 7 stocks that I'm looking at heading into tomorrow. And just a piece of advice of what I'm doing, I got some questions. Stock, should I sell out of my stocks before the Fed meeting? Should I not buy stocks around Fed meetings or whatever? The truth is, guys, you shouldn't be basing your buys, your sells around Fed meetings. That is not a reliable long-term strategy. You're always going to be at the edge of your seat if you're doing it that way. The truth is, if you're in a long-term portfolio, right, and short-term trading is different. I'm a short-term trader and a long-term investor. When it comes to short-term trading, I'm a bit cautious around Fed meetings, right? Which is why I didn't do much this week so far other than buy SoFi. I mean, last week I bought Activision, but, other than little moves here and there, covered calls, little initial positions, I'm holding a lot of cash into the Fed meeting in my short-term accounts. But for long-term accounts, it shouldn't be a concern for you too much of the month-to-month Fed meetings, if that makes any sense. Sure, pay attention to them, take them into account, understand what's going on, but you shouldn't be, in my opinion at least, it's all my opinion, you shouldn't just be buying before or, selling before Fed meetings and then waiting to buy back in if it goes down. To me, that's just too, it's just too much, right, for a long-term portfolio. If you're in solid companies that you believe in, some blue chips, some, growth stocks, some more speculative, whatever. If you have a good allocation to these, index funds with the S&P 500, solid companies, you should be fine. Sure, if you're in a bunch of penny stocks, companies that don't make a dime and that's all you're in, you might get screwed. But if you're in blue chips, S&P 500 ETFs, good companies, you're going to be fine. Don't worry about the Fed meeting too much. It's you're going to give yourself a headache, guys. That's just the truth. So overall, that's pretty much it. If you enjoyed the video, hit the like button, subscribe. Let me know your thoughts down below in the comments, and feel free to check out my Patreon. If you guys want all my buys, sells, call-outs, morning update videos, more access to me throughout the day, plus more, all of that's on Patreon, link down below, or you guys can go to stosserfest.com/Patreon. Make sure to also get your 5 stocks from Webull. You have another week or two to do that. Seriously, use my link down below, guys. Deposit any amount of money, and we each get 5 stocks. It's that simple. This is the best promotion that they've had, and you could also get $50 from M1 Finance, also limited time, which is also a great promotion. That's linked down below, and I'll pop up my video from earlier if you guys want to see it here. I'll see you there. Thanks for watching as always. Keep crushing the markets. Stay safe out there. Peace out.